you that you're welcome to ask questions in the chat as we go along. You can type them in the chat and I'll pick them up afterwards. Otherwise, you're also welcome to switch on your mic and your camera and we can put a face to the voice and you can ask your questions outright to Ross or to Sean or myself, and we'll try and answer as many questions as we possibly can in the time available. Ross is going to be talking to us about BTI, and then shortly after, Sean will do the technical bit, and then we'll have a nice chat and then a Q&A session where you guys are invited to participate. Thanks very much for joining us, and I'm going to hand straight over to Ross. Thank you, Ross.
Again, I'm Ross van Coller. I cover consumer staples and healthcare here at PSG Wealth. Today we'll be covering British American Tobacco, which is quite a loved stock on the JSE. Gone a little bit sideways for a couple of years, but seems to be doing quite well this year. A nice little dividend-paying company, selling products that people are addicted to. So obviously ESG concerns come in there, but personally I love this. I love the stock. I love what it does. And I love the defensive nature of it. So just to get started and an executive summary basically on what's happening in the tobacco sector. We obviously know that cigarette smoking on the whole is in a perpetual decline. People are smoking less and less cigarettes. They are picking up other forms of nicotine and tobacco in the form of your vapes and your oral pouches nowadays. But in their recent results, BATS normally guides for about 3 to 5% cigarette declines annually, and that seemed to come in a little bit ahead of what they guided to, which I'll touch on in a moment. But essentially, it is a bit of a to and fro between cigarette decline and then illicit vaping. We see vapes everywhere in our everyday lives, but most of the vapes that you will see in South Africa are illicit vapes. So unless you are smoking a booze vape, most of those wouldn't pass FDA regulations in the US, and I'll touch on that as well. But in the recent results, the revenue was down by about 8%. There were a number of factors that contributed to that, one of which being the exit of their Russia-Belarus business, currency fluctuations, and then also some inventory management from wholesalers. As I mentioned, they normally guide from about 3 to 5% in cigarette volume decline. They normally offset that with pricing. But the US volume decline came in at 13%, which is quite a lot. And that's on the back of 8% the previous year. The other issue is that their tobacco heated products, which don't light up, they just heat. You've also seen that around. Seems to be stagnating and not exhibiting the sort of growth that they were hoping for, but they are guiding to a lot more marketing and launches in the coming year as these products innovate. The highlight for me, and this is something I've been banging the drum on for a while now, is the modern oral segment. BATS is a little bit behind Philip Morris in this segment. These are little nicotine pouches that people put under their lips, their gums, and that was up 122%. We've seen that sort of growth from Philip Morris, but it's nice to see that BATS is sort of coming to the party now. We have a buy recommendation with about a 16% upside. Our valuation didn't change much, came down a couple of rand, and that was up about, it had an upside of about 30, low 30s not too long ago, but it's done quite well this year, so it's sort of making its way to their target price. So I'll just touch on the volume declines. This is the sort of issue that BATS is facing, not only BATS, but just cigarettes in general. I guess the less smoking, the better, but from a business where the majority of your revenue comes from combustibles, it is a little bit concerning. There were a few factors that will probably reverse in the second half of the year, that being sort of inventory movements with the wholesalers. There was currency fluctuations. Obviously, operating in different markets will have, as the currencies move, you'll have these headwinds. And then obviously the exit of the Russia-Belarus business. But we should see that come slightly down in the second half. They're still guiding for low 2 to 5%, I think it was, in organic revenue. So most of the time they take the volume declines and they'll beat it by increasing prices. So if you look there on the far left, basically that points to a 7% price increase versus a 13.7% volume decrease, which gets to your revenue of 6.7%. It's more or less like that. That's the basic maths of it. And then the second part of the equation is illicit vaping. Now, I've shown this slide before in previous presentations, and it hasn't been updated for a year. It's not my slide, but it gets to the point, and that is like basically smokeless has been around for 10 to 15 years now. And if you go back to 2014, still the majority of people were smokers who would sort of dabble in a bit of vaping, and now that trend has reversed completely. It's 2/3 vapors who don't even smoke cigarettes, and the last third is people who vape and smoke. So that's just the vaping sector, and they call it poly users. But essentially what BATS has been highlighting now, and the data wasn't too clear previously, but they initially thought that about 50% of all vaping in the US was illicit or illegal vapes. Now, these are vapes that come from China. And I've used at the bottom there, you can see what they are and how they've evolved. They haven't actually evolved. All that's done is the name has changed. And it's that simple to get through the ports in the US. So it went from Elf Bar. We see Elf Bars in South Africa, but in the US, that has now moved on to EB Create. So it went Elf Bar, EB Design, EB Create. They just changed the names and it gets through the port. So BATS initially thought that it was at 50%, but they had a capital markets day on Tuesday, and they said that's probably close to 70%. And what that basically, how that impacts the American economy, not only BATS, because these guys don't pay taxes or they pay much lower taxes. So they are seeing progress and they are seeing traction, but the FDA is quite slow to move on this, and it's quite a difficult job at the same time. But they're seeing more and more states enforce these bills, and hopefully that will drive some revenue growth. The US is a little bit different in the fact that each state works a little bit differently. But they, in their presentation, they used Louisiana as an example. And you can just see that once these regulations get imposed and enforced, they see a massive traction in the volume. So you can see just once it was booze is their vaping product. Once the regulation was introduced, they saw a 23% increase in volume. And now that's just volume, that's not even price. So you could get closer to a 30% bump in there. But as you can see, with 50 states, there's still quite a few states that are not non-compliant. So hopefully over time, we will see that change. BATS, Philip Morris, and Altria are all pushing regulation in that regard. And it does benefit everyone in the sense that more taxes will flow to the American economy. These illicit cigarettes are unsafe. They don't pass all the safety and standards of the FDA. And from a shareholder point of view, obviously, it would be great for BATS to see more of that revenue and not flow out of the company, mainly to China. Just to highlight the NGP growth, that's your next generation product growth. They've seen this has been quite a big trend in the last 5 years, let's say. There's a lot going on in this chart, but if you cast your eyes to the top right of that, you can just see the revenue growth of these new categories to consumers. Now, that's the number of consumers. So my favorite is the bottom little blue light line, which I think is going to be quite topical in the next few years, if not already. And that's showing millions and millions of consumers using these oral pouches, which you can use in the office, at home, because it doesn't emit any smoke. You don't need to spit like the old traditional oral products. It doesn't have any tobacco, and you can sort of get a safer version of your nicotine craving, if I can say that. There's still a lot of traction to go. Philip Morris has the majority market share in the US with regard to that. But the vaping and the tobacco heater products it's all growing as people move away from cigarettes. So just to harp on about the modern oral, Zyn is Philip Morris's product, so it's not British American Tobacco. Philip Morris has some nice little charts and diagrams. You can just see how these volumes of these cans have increased over the last 6-7 years to the point where there's actually a shortage in the US at the moment. So demand is far exceeding supply, and you've got sort of tech level of growth rates in this segment of next generation products. So how they compare, Philip Morris and British American Tobacco. Philip Morris is way ahead in terms of the transition to the so-called smokeless environments. They have a 2030 target of about 2/3 smokeless revenue. They're not far off that, or let's say not smokeless, next generation product revenue. Philip Morris are about 40% of their revenue, so they should get there by 2030, whereas BATS is going more towards 2035 of 50% of revenue being there. I don't think it's a bad thing. I think cigarettes will still be around for quite a while, and somebody's going to have to take that market share and sell the cigarettes, and BATS is quite well positioned to do so. So it's not too much of a concern, but it's nice to see that they've got a runway, to say, to achieve that. I always touch on British American Tobacco's debt because it used to be quite topical. It's much better controlled at the moment, and it's back to previous levels. But essentially, in 2017, they bought out Reynolds American for close to $50 billion, which in hindsight was a bad acquisition when you consider that their market cap isn't too far off that at the moment. But their debt levels were a little bit of concern, and they always had this plan of getting the debt down to 2.5 times net debt to EBITDA, which they were expected to meet last year, at the end of last year. They missed it slightly, but they are there now. By the end of the year, they should be at about 2.2, 2.3 times, at which point they said they would start returning money to shareholders. And they've already started that. They've done £700 million of buybacks this year, and they plan to do another 900 next year. So the share count will come down, net finance costs will come down, and they won't be in any sort of position of breaching any covenants or of concern for our shareholders. The other little thing I like to talk about, and it was quite topical at the beginning of the year, was the share in RTC, which used to be called the Indian Tobacco Company. Now it's just called RTC, and it's a conglomerate of a lot of things, tobacco being one, but mainly hotels, packaging and stuff. But this used to be a 30% stake in RTC. And as the share prices sort of converged, it became more and more topical because 30% of BAT's entire market cap was in this company, which didn't really translate to anything along the same business lines as BAT's. But they paid that down to about 25.5% in March, April this year, which gave them a little bit of cash boost, allowed them to bring down the debt, but still maintain voting control. And they have no plans of getting rid of that. I think they like the diversification benefits it brings. But it was just quite interesting to see that this isn't very talked about very often. Sorry, this chart's a little bit messy, but it gets the point. That's a sort of trended sideways for quite a while, and finally this year we've sort of seen a bit of an uptick and a bit of traction in the share price. Year to date, doing 25% has been very, very nice for us. They're still trending well below their average multiples. And if you look cast your eyes to the top right table, they're still at less than half the PE multiple of Philip Morris. Now, Philip Morris does have more of a growth story, so it's not all unjustified, but we still think it's a little bit cheap, and the discount can unwind over time. I'm not going to spend too much time here, but this is basically the valuation. My consensus is my EBITDA is a little bit low consensus, but even with that, there's still upside and traction. And what's nice is that in their net debt will come down, their shares and issue will come down. So just by doing those two things, you'll see an uptick in intrinsic value. But essentially, at the moment, we've got just under 17% of upside, and that's to the share price. They still pay an 8.5%, close to 9% dividend yield every year. So a nice little income generating asset there for investors. And it's a nice defensive company in a rand hedge if you have any concerns about the ZAR. And that's it from me. I will turn it over to Sean now to do the technicals.
Yeah, good morning, everybody. You can see the chart of BTI of BATS. That was until yesterday's close. You can see that the share price is still trading above its 200-day moving average. That's that yellow line at the bottom there. So the long-term trend still remains is bullish. But you can also see that the share price is testing the 20-day moving average. That was that red, we call it that red line, but it's still trading below its 50-day moving average, which is that bluish line. So the medium-term trend, excuse me, remains bearish. In the short term, the trend has bounced off. Sorry, let me just grab some water. The share price has bounced off the support. That's at about 610 level. You also see it recently has closed all those gaps, those price gaps, which is also positive. At the bottom there, you can see the MACD indicator. Excuse me, MACD indicator is trading in oversold territory, and it has just crossed over its trigger line, which is a bullish signal. So we could expect the share price to move higher and retest that resistance level at about the 660 and possibly that 700 Rand level. And I see today it's basically trading flat. You can see on the far left, right-hand side here, that green bar, 632. That's where we're trading at the moment also now. So as Ross said now, the intrinsic value is at 715, right at the top of the screen there. So it's still got a lot of upside to get to that target level. And then it's our buy recommendation. So everything's positive. And also, by the way, the all-time high is at 742, which is way back in December 2022. So a lot of upside potential. Yeah, great little stock to look at. And as Ross also alluded to, is great little dividend stock. Cool. Thank you.
Yeah, let's give Sean a chance to have some water. Growling a bit more than usual, mate. Glad to see you lived through that. Yeah, my observation on the charts is also, I mean, it's bounced off a support level. The short-term moving averages have crossed for a bit of a pullback, but I mean that's due to the dip in price between the end of September and October. So that's the only reason why that happened. It's above the 200-day moving average. Long-term trend remains positive on this. One thing I did want to point out to the people who are trying to understand the technical charts better is when you're looking at the price action and looking at the movement of the stock on the chart, it's always wise to compare what's happening in the volume at the bottom. And that's the reason why Sean has the volume at the bottom here. So if you look at that volume spike in August, you'll see that whole piece of late July to early August, right up to that long red bar. I don't know if you can put your pointer there, Sean, at the volume at the bottom. Yeah, so that long red bar. If you look at the price action there, it was sort of sideways. And that long red bar and all this volume increasing here was probably somebody building up a position. And straight after that, we saw some price action. If you look to the left, if you look to the middle of June, there was also a pickup in volume before the price actually started running. On the very far right-hand side, the volume has been fairly subdued. So I would wait a little while longer just to test the price action here before I jump in. But I totally concur with Ross that this is a very defensive stock and this is a good stock. They're moving things in the right way. They've got some fairly fierce competitors and big competitors with Philip Morris, but certainly somebody to be reckoned with. And from a Rand Edge point of view and getting some offshore revenue into your local share portfolio, then that's definitely a consideration. And some nice upside there pointed out between the intrinsic value and Ross's case. And Ross has stated that he's actually fairly conservative. So yeah, looking forward to that move. Thank you, Ross. I'm going to hop into the chat now and see if there are any questions from you guys. And then we're going to handle that. I don't see any questions at the moment. Anybody want to ask anything about the chart, anything about Ross's analysis of BTI, anything about the market? Sure. Nobody wants to talk to us today, Ross. Sean, what did we do? Okay. Guys, I'm going to leave it for about another 30 seconds. If there's any questions that come up, please put on your mic and ask them outright. Otherwise, we're going to close the meeting. I thank you, Ross, for your insights into BTI. Just one thing, those pouches that you were talking about, like that you put under your gum, is that like the cowboys chew tobacco in the movies? I haven't seen somebody walk around with a lump in his cheek. So
no, it's very subtle. Next time you at any garage or anything.
Yeah.
Just look behind the counter. You'll see they look like.
I normally check out the vapes, to see what I need to look out for. Oh, it's those things. I have seen them. Yes.
Yeah. So they're everywhere, and you'll see them. I've seen a huge uptick in South Africa because Zin has just come to South Africa at the moment. So if you walk around any mall, you'll probably see big promotions going on at the moment. But yeah, they just sits under your gum. You don't chew anything, you don't spit anything. You just basically dispose of the little pouch after about 10 to 15 minutes.
And Zin is a BTI product.
So Zin is Philip Morris. BTI is Velo.
Okay.
And then there is Velo in South Africa. I don't see it that often, but there's a whole host of different brands. But Zin is definitely the market leader in the world at the moment. But we've got various products here in South Africa. If you go to any tobacco shop, you'll see a whole shelf full of them.
Thanks, Ross. Thank you very much, mate. Thanks for highlighting that for me. I'll keep an eye out for Velo. If I catch my kids with it, then I'll be a little bit softer with them, seeing that I'm a shareholder in bats. But yeah, so I don't see any questions in the chat yet. So I think people are satisfied with your analysis. So to summarize, bats, definitely something to buy, something to own. Possible upside of about 16% according to Ross. And on the price action area, maybe another pullback to that red line around the 600 level or so, and then we'll see a bit of a bounce from there. We'll see you guys next week, and next week we're back with Pia, and we're doing the banks. We're doing Capitec next week, and the week after we'll be doing ShopRite. So for those of you who want to plan your time, same place. Thank you for your insight, Ross. Thank you for your bit, Sean. Much appreciated, mate. Drink some water and have a lucky Thursday. Cheers.
Thanks, guys.
Thank you, team. Well done.